Let's connect with the management of Sobha then. We have Mr. JC Sharma. He is the VC and MD here to talk a little bit about the sales momentum as well as the real estate sector as a whole. Good to have you on board. Thanks much for taking time out. Mr. Sharma, to begin with, we've been interacting with quite a few corporate voices and industry stalwarts, and they've been talking about the real estate space definitely facing headwinds right now. But despite that, you have managed to clock in a fairly steady and consistent sales growth. What would you attribute this?
Can you be a bit louder? Good morning. I'm not able to hear you.
Mr. Sharma, I'm talking about your outlook on the sales sector, on the sales that you've delivered. What would you attribute this to? Because this is at a time when the rest of the players are talking about the sector facing a lot of headwinds.
Yeah, good morning. See, what you are hearing also has got lots of factual data and the truth behind it. The real estate sector is definitely going through with difficult times. It has gone through with so many structural reforms over a period of last 3-4 years, and coupled with the recent liquidity crisis, that there has been certain issues vis-a-vis the demand, and because of such things, you are also seeing one noticeable trend where parallelly the bigger players, the listed space players, they have started showing improvement in their volumes, and somehow we have become kind of a beneficiary of this kind of an environment where genuine home buyers today are trusting more those developers who have got the capabilities to deliver their projects on time. At the same time, we also believe that these structural reforms as well as the steady state absorption of this commercial space, what we are witnessing today, is also helping us to create a good pipeline. And keeping those factors into mind, in our view, that the sector, while currently looks like facing a lot of headwind, should be able to not only withstand that, and post-budget may start seeing the demand coming back. The liquidity position seems to be improving. The genuine buyers today, they are buying in more numbers. The age of the buyers is coming down. The affordability is improving. So such factors drive us somehow to ensure that we keep launching new projects. As we did last year, more than 7 million square feet of new projects were launched. And in our opinion, right, the worst should be behind this sector, and probably post-budget we should see improvement in the demand as well.
Mr. Sharma, your order book growth was pretty impressive in the contract and manufacturing space. Can the performance sustain going forward too?
Yes. See, Sobha has got the advantage of having its own unique business model of delivering its own projects and also utilizing its delivery capabilities in doing projects for the other clients as well. And right now our order book stands at more than 2,600 crore, and keeping that kind of a pipeline, we believe that we can grow this year also more than 20% on the contracting side also. So what was considered to be kind of a drag ultimately has proved to be a huge beneficiary in our kind of a business, where this kind of a steady state order book supported by good cash flow and reasonably good margins has ensured that our balance sheet remains in relatively better condition.
Commercial rental space performing? Do you think the traction that's being seen currently can persist? You know, how much the commercial office space do you have in the pipeline?
See, right now, as I was telling, we are doing about 7 to 8 million square feet of commercial space, and so many other discussions are happening with our existing clients who may give us more orders as we move forward. And this is one business where we have demonstrated our capabilities reasonably well.
Residential front then, what's the traction there? Also just going ahead, really what you feel in terms of demand, the traction's looking like, what your outlook will be?
See, on the residential space, we believe that these half a dozen cities in India today, like Bangalore, like NCR, Mumbai, Pune, Hyderabad, Chennai, these are the cities to watch out for. Jobs are getting created, while at the macro level it may still look like there are job challenges, which may be true. But the India story vis-a-vis the IT sector, the India story vis-a-vis the startup sector, it continues to have its own competitive advantage. People are looking to acquire more quantum of office space, which in our view should be viewed as kind of an order book, because these are the people who will be migrating from small towns and villages to come to stay in these bigger cities, and at some point of time they will start buying homes. So looking at all such things and looking at the current affordability, we remain clear that the real estate sector, where it stands today, it can only grow and grow significantly better provided the kind of issues what this sector has faced, all the players learn the right lessons. The government is supporting the affordable housing scheme, which allows us to charge only 1% GST, which allows us not to pay any income tax up to 45 lakhs rupees. All such things support from the government side also that this industry is and its interest is taken care of. And we believe and have lot of hope that this coming budget should help us in giving us the right kind of impetus to ensure that the demand starts coming back and we start performing to our potential, and the Indian economy also starts doing better and better with some kind of a contribution from our sector as well.
Okay. Sure. So that's the outlook then going forward, and you're still pretty upbeat on that. Talk about the price scenario as well, execution of new projects going forward. I mean, people have been talking about, the fact that there could be consolidation that we see in the sector going ahead because of the highly leveraged scenario currently and tighter liquidity. Do you think that this may actually see a prolonged impact, and what would be the impact on pricing?
It's a very good question. As far as the pricing is concerned, we believe that at the current prices, most of the developers are not making the sufficient margin which is required for them to continue in the business. So at the end of the day, when we look at the cost of land, cost of approval and the cost of construction and the time it takes to complete a project, in our view, the prices right now are at the rock bottom levels. At the same time, we also are conscious of the fact that yes, due to the kind of structural changes which has taken place in our sector, and coupled with the liquidity crisis which the sector has been facing for last 9 months, the ability to increase the product prices is not that great. At the same time, the salary levels, though may be not growing at 10% or so on an average, it continues to rise. The inflation rates are quite stable, and big picture remains that the affordability today to own a home is at its best possible point. So keeping such things into mind, I have a belief that the prices have bottomed out. It can only start going up. Of course, some kind of that inventory hang up and the cleaning up of this inventory to that an extent, whatever time it takes, it may take, but from here onwards it can only go up. As far as our product prices are concerned, we are trying our level best to ensure that our margins remain reasonably okay, and at a higher volume we feel that it can only improve going forward, and remain confident that in times to come the prices and the margins we should be able to protect.
To go on that note, Mr. Sharma, thanks much for joining in and giving us an outlook. That's the view coming in from the management of Sobha, saying that metros are seeing a healthy demand. As of now, developers are not making sufficient returns. The pricing scenario looking a tad weak. Well, on that note, we slip into a quick break.